Should landlords, homeowners be worried? Should renters be worried? In this video, I'm going to walk you through the latest market stats, taking you through the actual facts so you can decide for yourself if now is the right time to buy or not. And in case you don't know me, my name is Will Gale, and the reason this is so important to me is I've spent over a decade building a UK-wide home buying company, British Home Sellers, a nationwide estate agency, British Home Sellers, and my own personal property portfolio. So not only does that give me a bit of inside knowledge, but also making sure I read the market correctly is essential to mine and my clients' success. So let's get into it. What's the economic outlook right now? As I'm sure you know, the Bank of England's committee voted by a majority of 8-1 to reduce rates for the second time this year. And they directly reference the aim of this rate cut is to support economic growth while ensuring the inflation rate returns to that 2% target sustainably, which they expect should happen over the next 18 to 24 months. So if you think or you're under the impression inflation will consistently fall below 2% over the next year, that actually is not what the Bank of England themselves think will happen. In their 90-page policy report, which I'll link below in case you want to read it, they actually directly cite that our favourite Chancellor's most recent budget isn't exactly helping with inflation, because the plan to spend an extra £70 billion of more cash that's backed by higher taxes and borrowing will actually add 0.5% to inflation. So that's slowing down the Bank of England's projections on inflation reaching that 2% target consistently. What's this mean? It means interest rates will take longer to come down as a direct result of the Chancellor's actions. But it is projected the increase in spending will boost GDP by 0.75%. Now, as you can see by that yellow dotted line, GDP has been on average shifting upwards, which is a really, really good sign, especially when you consider that higher GDP is generally linked to higher house prices. And it is clear as day that house prices have already been increasing as an average across the UK. Even if you break it down by nation, house prices are on the way up really everywhere. Now, I appreciate there will be areas within each nation that are performing better than others. For instance, my agency, British Home Sellers, we notice how some postcode areas are still seeing house prices fall and others are seeing house prices grow really quickly. But the overall average across each country is higher. Now, Rightmove share this quite nice breakdown every month that helps break it down by region. And of course, don't worry if you notice that almost across the board prices have dropped month on month, because that isn't actually unusual for November and December this time of year, of course due to seasonality. But they've risen year on year everywhere except the southwest and southeast that you can see there. Now, whenever I talk about house prices rising, someone always rightly comments below that house prices relative to inflation are still dropping. And you'd be 100% right. The blue line on this graph shows year-on-year percentage house growth adjusted for inflation, and the yellow line just shows nominal house price growth. And although house price growth is growing about 2.3%, that's the headlines you'll see in the news, when you adjust for inflation, that blue line is still slightly in the negative and has been obviously for some time. But also another thing I'd add to this as well is if you view UK house prices relative to earnings, it's still nowhere near the highs saw over COVID or even the highs saw before the 07-08 financial crash, even though average house prices are a lot higher now than then. So in reality, house prices are rising. House prices adjusted for inflation are still in the negative, but are clearly very close to being on their way to the positive soon. but house prices relative to average earnings are about where it was over much of pre-COVID. So let's look at property sales volumes, because although it's a lagging measure, as it's measuring completions in a month where the decision from a buyer to make that purchase would have happened months and months before, it at least shows us a trend on if transactions are shrinking or growing in number. And as you can see, sales volume data is tracking about 10% ahead of last year, which is significant. At the moment, my agency is tracking 71% ahead of last year. But of course, that factors in the fact we've grown as well, but we're still seeing a lot more activity. But ultimately, the volumes in sales have grown because the volume of demand has grown. And as you can see here, that's because the average number of buyers per estate agency branch registered with Propertymark is at a 2-year high at the moment. Now, just think for a moment. We've already seen transactions grow about 10% based on the volume of demand from months and months and months ago. The most recent figures of demand are the highest they've been for 2 years. So quite clearly, when I do this video next month and the month after, it just seems unlikely we won't see transaction volumes continue to rise. If demand rises and supply doesn't, then generally that pushes prices up. But before we talk about the supply of property coming to the market, we can also see mortgage advances have also been growing, which generally supports this narrative that demand from buyers has been increasing and increasing over the year. Despite this, how are affordability challenges in the market right now? Unfortunately, distress in the market is still growing, with 35% of adults reporting it hard or somewhat difficult to afford their rent or mortgage payments right now. And this is then displayed in the mortgage arrears data that has been clearly increasing quarter on quarter. And again, this is tracking in the new possessions cases as well. That's increasing. I made this point in one of my videos months ago that as affordability gets tougher, that is going to knock on to mortgage arrears and ultimately repossessions. And that is exactly what has happened. I suspect the saving grace that may turn the tide on this is as demand keeps picking up for people buying, it in turn is going to get easier for people to sell, which means although more households may hit the rising mortgage arrears stats, purely because about 70,000 households come off their sub 3% fixed mortgages each month at the moment, they're more likely to sell at a good enough price quickly enough to avoid being part of those repossession numbers. Watch the next video I'll release on this in a month to see if I've called this correctly. So what's happening with the supply of property right now? We established already that demand is clearly increasing and that if supply doesn't increase, then it's likely prices will keep rising. Well, the supply of property coming to the market has slightly dipped, but before we panic, in reality, that is actually quite normal heading into Q4 of any year. What's important is you can see from that graph that relative to last year, supply has risen close to 20%, and that consolidates to an increase of property each estate agency has on the market on average at the moment. The trend is that stock of property on the market is growing, which will help slow the pace of house price growth. It will slow it, but not stop it. But given the volume of sales per agent is tracking back to levels seen in 2021, it is quite clear we're on track to see the property market, I don't want to say boom through 2025, but really grow in terms of transaction volumes. So what will likely happen to house prices? Well, average house prices are already rising. Average house prices adjusted for inflation is already on its way to growth. Transaction volumes have already begun increasing. Properties sold subject to contract are recently back to the stronger 2021 levels. So I just can't see a world where house prices don't rise next year, both nominal house prices and also house prices adjusted for inflation. So if you're renting and can afford to buy, I think like most of the time, the sooner you buy, the better. And for those wanting to invest, property is still going to be an important part of anyone's wider investment portfolio. Irrespective of the 5% stamp duty or tougher regulations, it's still going to be a solid asset. But two things I think you'll find interesting before you head off. Over 80% of properties on the market at the moment are selling below the asking price. So think about that when you're next house hunting. And also there has been a steady increase in the percentage of properties that take longer than 17 weeks, longer than 4 months to exchange once they're sold subject to contract, which is pretty mad. I'll release a video like this every month so you can track how these numbers change over time, and I'll see you in the next video up here.